Hi there, I'm Dean Heskin, President and CEO of Swiss American Trading Corporation. Thanks for tuning into our podcast, The Secret War on Cash. I have with me my co-host, Chris Agelastos. Chris, good morning. Where are you? CC, bring him on. There he is.
There I am.
Fresh back from Greece. How was your trip to Greece?
It was phenomenal. Yeah. I'd like to go again, but there's a lot of work to do.
Well, let me ask you before we get into our articles here, was
Yeah.
there much talk about the United States, the economy, tariffs, BRICS, anything like that when you were over there? I know you were there on vacation with your family, but
Yeah.
was there kind of talks or discussions that way?
No, not really. I mean, nothing that I really picked up on. But what I did find interesting is that nobody there wanted the dollar. I had euros with me. I also had, regular USD. And I tried using it a few times or asked if they had a preference, and they didn't want it. Now, maybe it's just harder or would cost them more money to exchange it into the euro, which is what they prefer to use there. They did like cash. They definitely preferred cash to using a credit card or a debit card, but they did not like $100 bills from the U.S. They wanted euros for sure.
Well, and that probably speaks to, what's happening in the world right now. Dollar reserves are going down, and people are certainly distancing themselves from the dollar. Let's get right into that. Our
Yeah,
first article here, CC just put up, I believe. This U.S. sector will crash first if BRICS abandons the dollar. Now, the interesting thing about it is that alone, that title, that headline, is very concerning because if you were to read specific into that headline, what happens with the U.S. dollar has nothing to do with what the U.S. does per se. They're saying if BRICS just decides, hey, we're abandoning the dollar, the U.S. dollar will crash. That's frightening. That puts us in a very vulnerable position. But this
yeah,
sector will crash if BRICS abandons the dollar. And the reason I say it puts the U.S. dollar in a very compromised position because I don't want to steal the thunder, Chris, but somebody has to say it first, so I will. The sector they're
yeah,
saying will crash first is going to be the U.S. banking sector. And that becomes a concern because the banks pretty much that's the gasoline we put in our financial engine. And when it
yeah,
comes to family households, companies, the government, et cetera. So that's of terrible or tremendous concern. And as they're doing this, and you read through this article here, these BRICS nations are looking at, their objective, it says it right in this article, is a new financial era, where the dollar has no power. That's they want the U.S. dollar to have no power, no voice in basically international trade and commerce. So
yeah.
tell us more about this. Like, you think this could become a reality?
Oh yeah. I mean, it makes perfect sense, and I'm sure a lot of people maybe just wouldn't have thought too much about it, on the surface, but if you think about it, right, the U.S. banking system, banks like J.P. Morgan, B of A, Citigroup, all the big major banks that we use here, they're international banking firms, and what has helped them to grow so large is the fact that most of the world relies on the U.S. dollar as a reserve currency. And so there are a lot of US dollar transactions coming in and out of our country that are handled by all of these big banks. So I mean, it's really common sense, right? If all of a sudden there's less transactions happening, which we've been declining quite a bit over the last 20-25 years, but if those transactions continue to decline and those banks are predominantly doing business in the U.S. dollar, the banks are going to have a negative effect, and it's going to cause major problems with profits, interest rates, liquidity. All the things that go along with this sort of exposure. So, and the other thing too, the U.S. stock market. Those big banks. A lot of people have their 401k money invested in those
Sure.
bank stocks through different mutual funds and things because they tend to be pretty stable. But again, if
Well,
those big
Chris, they
banks are
say
suffering,
not to interrupt you, but they say
Yeah.
if this actually does play out the way this headline reads, it'll be the biggest stock market decline we've ever seen. And that makes sense. And for those tuning in, I mean, this is why diversification into metals is so important. And not just metals, but having land, cash, your equities, various different forms of assets is so important because, this would be a tremendously disruptive situation should it occur. We've already seen, I mean, think of it in these terms. Look at the banking problems that we've had in the last few years. And that's when things are relatively normal. When you have something like this happen, that is just that's a problem in banking on steroids is what it really boils down to. So let's get into this next article here then too, because it ties or plays right into it. As we look at what's going on with BRICS and they're looking to replace the dollar, de-dollarize the world, et cetera, the U.S. dollar dethroned. Only 60% global reserves still bet on its reign. And as you look at this, first off, dollar reserves are down 7% over the last 20 years. Now, some might say, okay, well, that's a little over 10% in the course, or a little over 10% in the course of 20 years. So it's bleeding, but maybe it's a slow bleed. But later on in this article, what it talks about is that the genie is out of the bottle as it pertains to people, countries, et cetera, that have concerns about the dollar and the longevity of the dollar. And kind of like you just earlier, like in Greece, where I would say 10 years ago in Greece, if you presented dollars to somebody, they would be, hey, sure, perfect, no problem. Now, even it's not just like banks and governments and institutions that are taking this stance against the dollar, but even individuals, because like you say, you're going to little restaurants or what have you, or maybe a little vendor, and you're trying to present them a $100 bill, they didn't want it. And so this is something, Chris, that with looking at how the dollar reserves across the globe are diminishing, what's to stop the whole floor from dropping out of the bottom? Anything?
No, I mean, and that's really the problem, because we're seeing a consistent reduction in the U.S. dollar being held as a reserve for central banks, and not only central banks but individual investors. People are like you mentioned, diversifying out of the dollar. A lot of that money the last couple of years has been going into gold or foreign bonds, other currencies, even alternative currencies, Bitcoin, other cryptos. People are looking for something stable that they can diversify away and limit some of their risk. And that's really the big thing that we need to look at here. This is a long-term growing trend. And, even though we're down to about 60% right now, like you said, some people will say, well, that's still over half. Well, that's because people still have a lot of faith in the dollar. There's a lot of question about it, obviously, and it's nowhere near as secure as it used to be. But if we see some more major events, if BRICS continues to gain steam and convert people away from the dollar, if cryptocurrencies and precious metals continue to grow, which all the analysts, at least with I'm no expert in cryptos, but I know obviously in the gold market everybody is predicting that it's going to continue to grow for at least the next couple of years as more and more people are diversifying into it. So as that continues to happen, and we see bigger drops in the value of the dollar, we could see the floor completely come out of it to a significant extent, to where you don't want to be the last person kind of holding the bag with your U.S. dollars.
For sure. Well, and look, the bottom line is BRICS is a reality. The alliance known as BRICS is growing. Nations are jumping on board. Literally, it seems by the day. And the problem with that is that, like, literally, if they put a charter out and what their objective was, I mean, literally, or what their objective is, I should say, the first thing on there would be de-dollarization, get rid of the U.S. And my point being is, like, it's kind of like in college days, when a person would rush a fraternity in hopes of getting in that fraternity, like the first thing BRICS is using to get all these other nations in is like, hey, you want to get away from the dollar? And they're all like, yeah, let's do that. And it's happening.
Right.
And it's happening
Yep.
before our eyes. And that's something that wasn't as present and prevalent, as 5 or 10 years ago. And that is something that, to your point, can cause that 60% to go down and go down rapidly. So, ladies and gentlemen, this is why, as we have the title of this podcast, "The Secret War on Cash." Excuse my tied tongue there. If you have not received a free copy of that report, contact our office at 1-800-289-2646, or you can visit us online at www.swissamerica, all one word.com. Actually, you can also text us at 1-800-289-2646. Call in, get your copy, understand what's going on out there, because this is a serious situation that is, it's like a pot or a kettle that's boiling, and it's eventually going to just hit that point where it boils over. So thanks for tuning in. If you're not subscribed, please do so. Chris, thank you for that information, and we'll see you all real soon. Have a great rest of your day.
Thank you. Take care.